Amazon is more than just a digital storefront. It's a story of relentless growth, risk, and reinvention. For investors, Amazon has been a masterclass in patience and the rewards of long-term thinking. We'll trace its journey from a humble online bookseller to a global powerhouse, and look ahead to its future. First, we'll revisit its IPO and the staggering returns for early believers. Then, we'll break down Amazon's core strengths, like AWS and Prime, and the real risks it faces from regulatory scrutiny to fierce competition. We'll see how Amazon stacks up against rivals in e-commerce, cloud, and streaming. Next, we'll dive into the numbers, massive revenues, thin margins, and how Amazon reinvests for growth. Finally, we'll explore Amazon's next frontiers, AI, healthcare, advertising, and sustainability, and ask, could its stock really hit $1,000 per share? In 1997, Amazon's IPO priced shares at $18, just 7.5 cents after splits. Imagine investing $1,000 back then. You'd have bought 55 shares, which, after splits, would be 13,200 shares today. With Amazon trading around $185 in 2025, that $1,000 would now be worth over $2.4 million. This is a 244,000% return, legendary by any standard. But the ride was anything but smooth. During the dot-com crash, Amazon lost over 90% of its value, dropping from $100 to under $6. Many gave up, but those who held on through the panic and volatility saw the biggest rewards. The lesson? Investing isn't just about numbers, it's about conviction and patience. Most would have sold after a double or triple, missing out on the real fortune. The greatest gains went to those who did nothing, enduring recessions, crashes, and skepticism. Their patience paid off not just from e-commerce growth, but from Amazon's knack for inventing new, profitable businesses. Amazon's story is a powerful lesson in the psychology of investing. The math is simple, but holding on is hard. Sometimes, the best move is to simply stay the course. Amazon's dominance is built on two pillars, its e-commerce platform and AWS. Prime membership keeps customers loyal, while AWS powers much of the internet and delivers high profits. AWS's cash flow funds Amazon's bold experiments and expansion, but Amazon's retail margins are razor-thin, making it vulnerable to price wars and rising costs. Regulatory scrutiny is a growing threat, with antitrust investigations looming in the US and Europe. A forced breakup or new regulations could fundamentally reshape Amazon's business and future. Amazon faces fierce rivals on every front. In e-commerce, Walmart dominates the US with its blend of online and in-store shopping, while Alibaba rules China. In the cloud, AWS leads, but Microsoft Azure and Google Cloud are closing in fast. In streaming, Amazon Prime Video battles Netflix and Disney Plus for attention and content. Amazon's strategy used profits from AWS to fuel growth elsewhere, accept lower margins and play the long game. But it's a constant multi-front war against specialized, powerful competitors. The outcome of these battles will shape Amazon's future. Only relentless innovation and scale can keep it ahead. Amazon's financials reveal a company of staggering scale, over $600 billion in revenue in 2024. Yet profit margins remain slim, with net income around $35 billion or just 5.8%. Retail often runs on razor-thin margins, while AWS delivers the bulk of profits with margins over 30%. Amazon carries significant debt, but its massive cash flow, over $80 billion annually, lets it invest, pay down debt, and innovate. This model, high revenue, blended margins, strategic debt, and huge cash flow, is central to Amazon's story. AWS funds retail expansion and new ventures. Investors must look beyond headline profits to see the real engine, cash generation and disciplined reinvestment. That's what keeps Amazon growing. Amazon's future depends on bold bets in AI, healthcare, advertising, and sustainability. AI powers everything from recommendations to logistics, and AWS is a key player in the AI revolution. In healthcare, Amazon Pharmacy and One Medical aim to disrupt $1 trillion industry. Advertising is booming. Amazon's ad business now rivals YouTube's, targeting shoppers at the moment of purchase. Sustainability is another focus, with Amazon pledging net zero carbon by 2040 and investing in electric vehicles and renewables. These bets require massive investment, but could create new pillars as big as retail or AWS. If successful, they'll drive Amazon's next era of growth. The risks are real, but so is the potential. Amazon's willingness to reinvent itself is its greatest asset. By 2030, Amazon's current engines AWS retail and advertising will likely mature. The future depends on new bets, healthcare, logistics, AI, and perhaps industries we can't yet imagine. Amazon could become a utility for commerce, data, and health, or face a breakup by regulators. Even if split, its parts would remain valuable, but the synergy could be lost. The most likely path is continued evolution, shedding old lines, entering new ones, and staying relentlessly innovative. Regulation, competition, and disruption will test Amazon's adaptability. Its journey to 2050 will be a test of reinvention on a massive scale. Only those who adapt survive. Could Amazon's stock hit $1,000 per share? That would mean a $10 trillion company, an audacious goal. To get there, Amazon must scale new ventures, keep AWS dominant, and turn bets like healthcare or robotics into major profit engines. The risks are huge: regulation, fierce competition, and the challenge of growing at such scale. The bull case is that Amazon's management can keep inventing the next AWS. The bear case: regulation or competition derails growth. It's not a question of if, but when, and what could go wrong along the way. Investors must weigh ambition against risk and understand the balance between potential and challenge. The future belongs to those who can see both sides.